Covered call ETFs are paying anywhere between 8 to 14% monthly. And the cool thing is, this could be a great place to add a little bit of income into maybe a retirement portfolio or into a regular person's portfolio altogether. Now, the problem is there are so many great ETFs on the market that it's kind of be hard to choose from. In today's video, we're going to be ranking the top 11 covered call ETFs from different categories from the S&P 500, NASDAQ 100, and some alternatives that you could add to your portfolio. And we're going to see which one deserves maybe a place in your portfolio. This video is purely educational content. It should not be considered personal finance advice. I'm not a licensed financial advisor, and I don't know your financial situation, risk tolerance, or even investment goals. Past performance doesn't guarantee future results, and always do your own research and consider consulting with a qualified financial professional before making any investment. All right, let's get on to the video. Hey guys, my name is Steve, and I run the Frugal Expat website where we try to help people to save more and invest better. And today we are going to be ranking the top 11 covered call ETFs based upon total returns, based upon yield, based upon expense ratio, and based upon different strategies that you could be adding to your portfolio. Now, not all of these are equal, so some of them may have high yields but low total performance. Some of them may have both, some may have high expense ratios. So we're going to be taking a look and seeing which ones could be the one that you want to add to your portfolio. Now, first of all, we're going to talk about what are covered call ETFs, some of the risk and trade-offs of covered call ETFs, and also break down the different categories, S&P 500, NASDAQ 100, and some alternatives that you could add to your portfolio. So let's get to it. So what are covered call ETFs? So covered call ETFs are ETFs that are selling call options on their portfolios. So these are ones that may be tracking the S&P 500, and so what they're doing is they're selling a call option on some of their assets under management, and they're receiving a premium. They're using that premium to distribute to their shareholders as dividends, and they're going to pay that every single month. So the way a covered call works is basically you have 100 shares of a stock. You're going to sell the option to someone else to buy it at a certain price. That is the strike price, and they are going to pay you a premium to buy that option. Now, if the call option does not hit that strike price, you keep the shares and the premium. If it does, you sell the shares at that strike price to the option buyer. So that's basically how it works. Now, when we're talking about different risk and returns, some of the risks that could be a part of this call option strategy is capped upside. So if you have a stock that's $100 and you sell it at 110 and it goes up to 120, you have capped your upside at 110 and you'll miss out on some of those returns. So that could be some risk to covered call ETFs. You're going to have a capped upside. So if a bull market happens or things just go crazy, you're going to miss out on some of those big returns. You are also going to have a possibility some places are going to have some NAV erosion, and so that could be a risk of these covered call ETFs. Now, the ones I'm talking about don't have any NAV erosion because I wanted to make sure to have good ones for you guys to look at, but there are some from YieldMax like ULTY or MSTY that have kind of crashed and burned. Like MSTY is like 81% from a year ago, which is crazy. ULTY is down maybe 60 to 70%. And so there's some NAV erosions going on with some other covered call ETFs. Market dependency could be another risk. That means you need the market to be a little bit volatile. That means juicier premiums, because if the market is quite calm and kind of stable, then the premiums aren't going to be there. If it's in a bull market, a lot of the premiums are going to go down unless you have different assets that have lots of volatility. But if the market is nice and calm, premiums are going to be a little bit less, so that means dividends will be less as well. You could have some yield fluctuation. Like I said, with volatile markets, yield could fluctuate. Another thing could be the return of capital. Some companies, a lot of these ETFs are doing return of capital, and this could be very good for tax reasons. But sometimes if the NAV isn't accelerating or even growing, this could also be kind of a bad thing. But that is besides the point right now, because that could be a risk of return for these ETFs. Now, not all of these ETFs are good for everybody's portfolio. It may be better to have maybe a growth ETF, a good S&P 500, and maybe a good dividend ETF. And classic retirement portfolios are full of dividend stocks, dividend ETFs, treasuries, bonds, and those are very conservative and give you some good moderate dividends. And so then that could be something for your portfolio. Now, the reason I talk about covered call ETFs is because it's just a new asset, a new kind of strategy to kind of pump up some of that income and be able to have a little bit more income and a little bit different ETF a part of your portfolio. Now, like I said, these are not for everybody. And so this video is for educational purposes, and just make sure to always do your research before you dive into some of these different assets. All right, so let's dive into some of the best covered call ETFs according to my rankings. And I'm going to rank them at the very end, but I'm also going to rank them due to very different categories. Our first category is going to be the S&P 500 covered call ETFs. So these are a couple of covered call ETFs that are doing the S&P 500 and they're selling assets under management. Our first one's going to be gpyi. Now gpyi is the JP Morgan Premium Equity Income ETF. This ETF has an expense ratio of 0.35%. Right now it's got a yield of about 8.08%, which is kind of disappointing because you would expect it to be maybe a little bit higher, maybe closer to 10%, but that's okay. The total return of 2025 is 8.17%. So that's the disappointing part, is that it's got an 8% yield and it's only grown about 8.17%. So this ETF is one of the older covered call ETFs. It's all the income that it produces is taxed as an ordinary income. A lot of the other ETFs is taxed with a ROC or 1256 contracts or another way where it's more tax efficient. gpyi is not. It is taxed as an ordinary income. So it's probably best to be in a Roth IRA. Or, I mean, you could definitely have a taxable account to kind of compound over time. But this ETF tracks basically the S&P 500. It sells out of the money covered calls on the S&P 500, and it's supposed to produce some pretty good yields. But the problem is the NAV erosion is starting to take place. More people are looking for better ETFs. Now, it is one of the largest covered call ETFs on this list with a huge assets under management. But the problem is it's underperformed. It's got a lower yield. It's more conservative. It does have a low expense ratio, 0.35%, but the expense ratio isn't really, the active management, it really isn't doing much. And so that's why it's number 3 on the S&P 500 ETFs list. All right, let's go on to number 2. Number 2 is going to be SPYI, which is the NEOS S&P 500 High Income ETF. Now, this ETF is done by NEOS, which is a great company producing some amazing covered call ETFs. And so this one is one of the OGs, and it's got 11.68% yield, or 11.6 if you want to make it simpler. The total performance is sitting at about 16.81% with an expense ratio of 0.68%, meaning it costs $68 for every $10,000 invested. Now, this one's got about $7.5 billion in assets under management, so it's growing pretty fast, and it's a great ETF that you can buy and hold in your portfolio. Now, this ETF, what it does, it sells out of the money covered calls on its portfolio, and it does about 75% to 90% of its portfolio. And so you're getting a pretty good return off that. And now the upside is not fully capped, so you're going to have some price appreciation with this ETF. It's more conservative, as in it's got the S&P 500, so it's more conservative than maybe some that tracks the NASDAQ 100. It's got a very good yield of about 11.68%, and it's very constant. It's also got a great total performance in 2025, about 16.81%. So you're getting pretty good performance with this ETF, and it's pretty good if you want a solid conservative S&P 500 covered call ETF. SPYI is one of my favorites. Our next ETF is going to be gpix, which is the Goldman Sachs Premium Equity Income ETF. This ETF's got a yield of about 8.02%. It's got a total performance over in 2025 at 16.51%. So it's doing a little bit less than SPYI, but the cool thing is it's got an expense ratio of 0.29%, and it's got about $3 to $4 billion in assets under management. Now, this ETF's a little bit different than SPYI. It sells at the money covered call options So it's going to have a lot of juicier premiums than SPYI, but it only sells at about anywhere between 25 to 75% of its portfolio. Most people are saying that's doing about 25 to 50%. The Perspectives says 25 to 75%. So it's allowing some of the upside to happen. And so that's good news for this ETF. Now, it's got a lower yield than SPYI. It's got a little bit less in kind of that total return, but it's also got a cheaper expense ratio. So for the future, it could do much better than SPYI. It just depends on how the market goes. Now, if you're looking for more income and less total return, SPYI would be the pick. If you're looking for a total return and the potential to do better with less fees, GPIX would be the pick. So those are the top 3 of the S&P 500 covered call ETFs. Now let's talk about the NASDAQ 100 covered call ETFs. We got 3 other ETFs for this category. Our first one is going to be JEPQ. JEPQ is the JP Morgan NASDAQ Premium Equity Income ETF. Now this ETF has an expense ratio of 0.35%, just like JEPI. Now it's got a yield of about 10.31% and a total return of 15.38% for 2025. This ETF's got anywhere between $13 to $15 billion in assets under management. It is one of the OGs as well, and this one was one of the highest flying ETFs on the market until, of course, it got dethroned by some other better covered call ETFs. Now, just like JEPI, all the distributions are taxed at an ordinary rate. It's got a low yield of about 10.31%, and the total return is only at 15.38%. So this could be a good one that you could add to your portfolio. It's going to be taxed at an ordinary rate, but still getting some pretty good yield, pretty okay total return, and it could be one that you want to add to your portfolio. Our next ETF is qqqi. qqqi is the NEO's NASDAQ 100 High Income ETF. Now it's got an expense ratio of 0.68%, so it's $68 for every $10,000 invested. The yield is sitting at about 13.76%, so it's pretty good. The 2025 total returns is 18.83%, so it's a pretty good total return compared to a lot of the others we've already talked about. And it's got about $8 billion in assets under management and continues to grow. It was ranked the #1 best actively managed ETF in 2025, and it is just one of the better ones. Now, this has got a great yield. So if you're looking for yield, this could be it. It's got a very good total performance of 18.8%, and so it's got a great total performance. So it's got not any NAV erosion, so it's growing the NAV a little bit by a little bit. It's got a more expensive expense ratio, but with that, it's also, like I said, the best actively managed ETF of 2025. So this one is a great one. If you're looking for some tech, the NASDAQ 100, if you're looking for a little bit more volatility because it's giving you a higher yield, qqqi. So this one could be one that you could add to your portfolio. This is one of my favorites, and I keep on suggesting, but it isn't ranked #1 in the NASDAQ 100 because there's one better one, and that's one I'm going to be talking about next. So if you're looking for good yield, good total performance, and a great company and a great ETF, qqqi is a great one that you can buy and hold and put in your portfolio. Hey guys, if you really like this video, make sure to hit that like button and subscribe. And one of my favorite places to do research for all these ETFs is Seeking Alpha. Now, Seeking Alpha does have a premium plan. It's got a Alpha Picks plan, and right now I usually use that Premium Pro plan. You know, I'm just going out, I'm looking and reading, researching, reading some of the articles, seeing kind of the grades they give some of these dividends and even some of these ETFs, and it's just a wealth of information that you can start today. Now, you can obviously research everything and look at Seeking Alpha for free, but the Premium and Pro plan gives you so much more, and it's a great place to kind of do some of that research. So if you're looking for doing some research about these ETFs, about different stocks, and about different assets overall, Seeking Alpha is the #1 place I go to do my research. I'm going to leave a link in my description and a link in my pinned comments, so you can take a look at that. This is an affiliate link, and so I will get a small commission from this, but if you use my link, you'll also get a massive discount. So that's great news to you. All right, let's get back on to the rest of the video. Our next ETF is going to be gpix, which is the Goldman Sachs NASDAQ 100 Premium Income ETF. Now, this ETF's got an expense ratio of 0.29%, so it's much cheaper than a lot of the others. That means it costs about $29 for every $10,000 invested. Now at some point it's going to go up to 0.35, but it hasn't done that yet. Now this ETF has about a 9.82% yield. It's got about a 19.97% total return. Now this ETF does have one of the best total returns on this list of ETFs. It's got a very good yield of close to 10%, and the total return is close to 20%. The reason I rate this the highest is because it's got the best total return of all the NASDAQ 100 ETFs. It's got a very good yield of about 9.82%. It's got a very low expense ratio, so it doesn't cost as much to hold this. It's with Goldman Sachs, so it's got a great company behind it, and it tracks the NASDAQ 100. So you're going to get a ETF that sells at the money covered calls of not the entire portfolio, just like gpix. It's doing anywhere between 25 to 75%, but probably closer to 25 to 50% of its portfolio, allowing some of that other portfolio to kind of have some upside. So it's going to be selling at the money, so closer to where the price is, to create more yield, and then it's going to allow the rest of it to kind of go up with the markets. So that's good news for you. If you're looking for a total return and a very good yield, GPIQ is that ETF for you. If you're looking for higher yield and less total return, qqqi would be the better one. Now, we just went over 3 NASDAQ 100 ETFs. Now we're going to go over some alternative ETFs that we can throw into this list of covered call ETFs. Now, if we're looking for some alternatives, the first alternative is going to be IDVO. IDVO is the Amplify International Enhanced Dividend Income ETF. Now, this ETF gets a little bit different. It is not tracking the US market, and is tracking more of the international market. So it's selling some covered calls on some of those international assets. Now with this ETF, you're getting about a 5.06% yield, you're getting a 35.55% total return, and you're getting a 0.66% expense ratio. So it costs about $66 for every $10,000 invested. Since the international market is going so high, the US dollar is a little bit weak, you're getting some good performance overall. And so that 35.5% performance is crushing all the other covered call ETFs on this list for 2025. It's got a yield that's quite low, about 5.06%. So it's not the highest yielding on this list. And so this could be something that you want to add to your portfolio to get some of that international exposure. I know that Neos has created their own international ETF, and it hasn't been around that long, so I don't have the 2025 data for that to kind of put on this list. But with IDVO, you're getting a good international ETF, you're getting some covered call income, and you're giving some pretty good exposure and some good value with this ETF. Now, would this ETF be one of the top on my list? Well, I kind of like IDMO as an international ETF, or VYMI as an international ETF. But if you're looking for some covered call income, this could be one that you can add to your portfolio. Our next ETF is going to be QDVO, which is the Amplify CWP Enhanced Dividend Income ETF. This ETF's got an expense ratio of 0.55%, meaning it costs about $55 for every $10,000 invested. It's got a yield of about 10.13% with a total return of 20.15%. So this ETF has got a lot of tech. It's also got some regular dividend companies a part of it, but it's got more of those tech companies, like it's got the Nvidias, it's got some Tesla and Amazon, it's also got some Coca-Cola and Home Depot as well. So this ETF's a little bit of a mixed bag, but it's got a lot more tech, and so it could be focused on those NASDAQ 100, but it's got anywhere between 20 to 40 different companies in this portfolio. It's actively managed, it doesn't track an index, but it does have a pretty good yield and a good price appreciation. Now you're getting 10% yield, good. You're also getting some of that total performance of over a little bit over 20%, so that's very good. So it's got one of the top performances on this list. It's got a good yield, and it's got a cheaper expense ratio than the Neos funds. Now this ETF is quite new on the scene. It's a little bit newer than a qqqi, but it's got some good performance, good yield, and it's got a good strategy. So if you're looking for something that's got a little bit of mix of the yield plus the total performance, and it's got some classic dividend companies with a lot of tech companies, QDVO could be that ETF for your portfolio. Now, some other ETFs that we could mention on this list, like I said, we have 11 covered call ETFs, is we have Devo, which is got a 6.24% yield. It's also got a 17.40% total return and a 0.56% expense ratio. We also have TSPY, which is Tap Alpha's 0 DTE SPY cover call ETF. This ETF basically sells 0 DTE or 0 dates to expiration cover calls on SPY. And so it's got a 13.57% yield and a 17.86% total return for 2025. It also has an expense ratio of 0.77%, so it's the most expensive ETF on this list, but it's still got a pretty good yield and a moderate price appreciation with this. It's also got a very different strategy. And then we also have IYMI, which is from NEO. So it tracks the small cap portion of the market, and it really hasn't done as well. It's got a yield of about 14.82%, but I put it on this category just to give you some alternatives to your cover call strategy. Now let's take a look at the best performing, best yield, and the best overall rankings of all these ETFs. Now you may disagree with me, that's great. Make sure to leave a comment so then we can talk about it, but let's go over those rankings. Now we're taking a look at some of these best rankings, and so we got number one would be IDVO. The reason it's ranked the best is because it's got a total performance of 35.5%. And so that kind of blasts everybody else out of the water. Now, the global market, international market has been crushed in 2025 and probably will do the same in 2026. Now, it's got a yield of about 5.06%, so the yield is not the highest. It's also got an expense ratio of 0.66%, so maybe you're hoping for a better yield, but this one doesn't give you that yield. Now, number two is going to be GPIQ. Now, GPIQ, it's got a yield of about 9.82% with a performance of about 19.97% and expense ratio is 0.29%. So it's a cheap expense ratio, very good total performance, and a yield close to 10%. So this is a great ETF that you could buy and hold in your portfolio. Our next ETF would be QDVO. Now, QDVO's got a total performance of 20.15%. It's got a yield of about 10.31% and expense ratio of 0.55%. So it's got a great total performance, a very good yield of over 10%, and a moderate expense ratio. So this one could be a great one to add to your portfolio. Now, our next range of ETFs are going to have some good yields. Our next one's going to be qqqi. Now, qqqi has got a yield of about 13.76%. It's got a total performance of about 18.83% and expense ratio of 0.68%. So it's got a very good yield, a very good total performance, and a moderate expense ratio. Our next one is going to be SPYI, which has a total performance of 16.81%. It's got a yield of about 11.6%, and that expense ratio is 0.68%. Next one's going to be GPIX, which has got a yield of about 8.02%, a total performance of 16.51%, and expense ratio is 0.29%. So that makes up our top 6 ETFs on this list. Now, our next couple ETFs are maybe have some good performance, but maybe the value isn't there. So you got Devo number 7. It's got a 17.40% total performance, but the yield is sitting at about 6.4, 6.5, 6.6%, and the expense ratio is 0.56. Our next one after that is going to be TSPY, which is very new. It's got a yield of about 13.57% with a total performance closer to 18%. And so this ETF could be on your list, but it's got very expensive expense ratio of 0.77%. Very brand new company. It's only got 2 ETFs, so it could be one that maybe not around all along, or it could be a good one for the future. Number 9 is going to be JEPQ. Now, JEPQ has a yield of a little bit over 10%, and it's got a total performance 15.5 to 16%. So this one is kind of right below TSPY. Our last 2 ones are going to be IWMI and then JEPI. Now, IWMI has a yield of about 14.86, so it's pretty good. Not so bad. JEPI's got a yield of around 8%, and a total performance of about 8.15, 8.17%. So it's very at the bottom. So if I were to look at this list of great cover call ETFs, you know, one of the best ones is gpix. You're getting a good total return and you're getting a good yield for a low price. QDVO has a better total performance, but it's not really marginally that much better than gpiq. Now, if you're looking for one with the best yield, qqqi has got the best yield on this list. And so this one could be one that you could add to your portfolio for yield alone. If you're looking for a more conservative approach, good yield, and a pretty good performance, I would go with spyi or a gpix. So those are kind of some of my favorite ones on this list, and that's the ranking I produced 1 through 11. Let me know in the comments, did I get my rankings right? Did I get it wrong? Which ones would you put at number 1, number 2? Which ones am I missing from this list? Am I missing maybe a Bitcoin one like a BTCI or blocks? Maybe I didn't put it on there because Bitcoin has gone down a little bit, and maybe this could be something that you could be thinking about adding to your portfolio. Let me know in the comments, and make sure to check out our video on some of the best cover call ETFs for 2026 right up there. All right, I'll see you guys in our next video.